What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about American Express, which reported their earnings pre-market today. So I'm going to break down the revenue, the earnings, the cash flows, the valuation, the balance sheet, and the intrinsic value. I don't think I've ever done a video on American Express, so this is going to be it. We're going to be calculating exactly where it should be trading based on the future expected earnings growth for the company as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month, and you can access all the buy and sell alerts, options alerts, trade ideas, everything is going to be included. So link's going to be down below. So pre-market right now for American Express, we are slightly lower, down a little bit over 1.36%, trading as low as 162.70. And before I jump into some of the fundamentals and the intrinsic value here, I want to go over the actual earnings the company reported. Now, the sad thing is that there's a lot of companies out there that are reporting year-over-year declines, and I'm still hearing from people that they don't believe an earnings recession is coming. How is that possible? Wake up and smell the air, and you've got earnings declining year over year for so many companies, except for banks, which did well at the last hour because of the inflows from Silicon Valley Bank failure. You've got streaming, electric vehicles, and now even credit card processing and payment processing company American Express reporting an earnings decline. We learned from Netflix, we learned from Tesla, and I'm pretty sure a lot of other big tech companies are going to be reporting year-over-year declines at the moment. So American Express reported earnings of $2.40 a share for the first quarter, down from $2.73, and a record revenues of $14.28 billion. So revenues are coming in strong, but margins are compressing, and as a result, EPS is also going down. Analysts surveyed by FactSet expected the group to report earnings per share of $2.66, so they also missed on EPS, and revenues expected at $13.98 billion, so beat on revenue, miss on EPS, and revenue also rising from $11.74 billion in the first quarter of 22. So these right here were the numbers. Total network volume in billions, almost $400 billion. It's a 14% growth there, and 22% increase on a year-over-year basis for revenue at over $14.2 billion. This is a record revenue for the company. But again, we've got EPS and net income pretty much dropping 13% and EPS down 12%, with shares outstanding also coming down. The company's been pretty good at buying back shares almost every single year. So our first quarter results reflect strong growth in credit card member spending and continued high engagement with our premium products, tracking the full year 2023 guidance we provided in January, which we are reaffirming today. So in terms of outlook and the guidance, they are reaffirming their guidance, and revenue growth of 15 to 17% and earnings per share of about 11 to 11.40. So if you take into account the shares right now trading at around 162 divided by 11.25, you kind of take that mid guidance, they're trading at 14.4 times earnings multiple, which obviously is a lot cheaper than if you were to compare that to Visa, MasterCard, or any other payment processor, any other company out there that's in the same sort of industry. So 14.4, 15 times earnings, definitely a lot less. And revenue grew 22% from a year earlier to reach a quarterly record as card member spending rose 16% on a foreign exchange adjusted basis. And travel and entertainment spending was particularly robust, growing at 39% on a FX adjusted basis in March. And we acquired 3.4 million new cards during the quarter, with US Consumer Platinum and Gold, US Business Platinum, and Delta co-brand account acquisitions all reaching record levels for the company as well. This right here is going to be their profitability margins, which definitely is a lot lower than compared to some of the other companies out there. So we've got gross profit margins at 56%. We got net income margins at only 14%, right? This is dramatically lower. And if you take a look at their sector median, 26.7%. So that is significantly lower, 44%, almost half of the actual industry that they belong to. And the 5-year average has been around 15%. So it's almost always been a lower margin business, American Express. And return on common equity, very strong at 31%. But then we've also got some of the lower return on assets and return on capital for the company. Now, balance sheet is okay, I would say. Like current ratio and quick ratio are over 1, so that's decent. But total cash at over $33 billion, debt sitting at over $45 billion, and we got $11.6 billion of net debt, which is positive. So not something that I'm super excited about. This right here is the valuation. So we just went over the valuation in just a minute. 16, 14 times earnings multiple with a little bit over 2 times sales. Definitely trading at a cheap valuation, right? So they're definitely trading at a much lower valuation, at the moment, right? So, but again, you've got to account for that growth as well. So if you come over to the financials of the company, they have not been consistently growing, but they have rather been very flat. So going from 7 billion to 12 billion in the last 9 years, which is not terrible, but there hasn't been a lot of growth for the company. And total revenues here have also, this is the total interest and dividend income. So total revenues, once again, you can see that they have gone from 30 billion to over 50 billion. That was the interest income or interest and dividend income for the business. So this is their total revenue going from about 30 something billion dollars to over 50 billion. So again, they've been pretty stagnant, pretty stable. And the last 3 years is really where they have started to grow a little bit more. And then if you come down to the net income, again, very inconsistent. Some years they're generating very small profits, some years a little bit higher, some years a little bit lower. So it's really all over the place. There's no predictability with respect to where the earnings are going. Now, yes, with respect to diluted shares, every single year they've consistently bought back shares. So they've gone from like a billion shares down to 752 million. So that's really good for the company. And cash flows, if you come down, you'll notice that free cash flows have also been a little bit more on the inconsistent side, where you've got, pretty stagnant in the last 3 years. They've really been growing that to over $25 million. That's $25 per share free cash flow overall. It doesn't say over here, but if you take a look at, let's just do that math together, cash from operating activities here, $21 billion on a trailing basis, and CapEx is going to be sitting at about 1.8 billion. So yeah, roughly around 18 to 20 billion dollars on a trailing 12-month basis for free cash flow for the company. Now, in terms of earnings forecasts, so earnings estimates, they're not the best. They're expected to go from $11 all the way up to $14.36. That's going to be about a 13% growth, 12.5, 15.5, and then a drop of 9.7, then a growth of 9.7. So that's where we are with respect to earnings. If you compound that over the next 4 years, that's going to be a very small 6.6% growth for American Express. So if I go with, let's just say 7% growth for American Express in terms of net income, and we go with a P multiple of about 15, which is where it's trading at the moment, that's definitely going to be a little bit higher on the PEG ratio. And let's just do 12% discount rate, 10% margin of safety, and we've got a share buyback, which the company's consistently been buying back shares. Let's just do 2% here. We get a fair value of roughly around $118 per share for AXP. And right now the market price is around 162, which means it would need to come down another 20-25% in order for this to make sense from a more long-term perspective, because they do also have a dividend yield of a little bit over 1.4%. And this right here is going to be that sensitivity grid with the growth rates and the P multiples as well. We've got, different P multiples. You can kind of check that for yourself depending on where your personal sort of analysis will be. Depending on that, of course, the fair value will fluctuate. Now, in terms of the technicals, it's been trading sideways for a very long time. So since March of 21, it's pretty much been trading sideways between 132 and 194. And we have really not gone anywhere since June of 21. So it's been almost 2 years with American Express pretty much trading sideways at the moment. So resistance is going to stay put at 194, 195. So this right here is going to be that level to watch. And a support level staying put at roughly around $132. That's going to be in line with this couple support levels that we have also validated in the past. Over here, we got validated once, and this right here was the second time. Perfect validation for American Express at those prices. So 132, very strong support, which would also suggest as a potential swing trading idea, swing trading opportunity for the long side here for American Express, and resistance going to stay put at 194 with a fair value setting at 118. So I hope you guys enjoyed this video and a complete update on American Express. Let me know your thoughts down in the comment section below. But bottom line is that we are seeing declines on year-over-year basis for a lot of companies, right? It's not a fluke. It's not a coincidence. It is just these higher interest rates playing a much bigger role with the overall economy and, of course, consumer spending, and where we are in this cycle with respect to earnings and economics as well. So again, hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us and getting access to all the buy and sell alerts, options alerts, trade ideas. There is a 16% annual discount available. So links down below. As always, happy investing. I'll see you all in the next video.